Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome to my analysis of the Treasury markets. This is Brandon Wendell with you again, and taking a look at the weekly chart of the 30-year Treasury bonds. As you can see on the weekly continuous contract, we had bounced off a demand zone back in early 2021. Demand was all the way back here in 2019. You had a nice drop-based rally. Looks like we're heading back down that way. And when you zoom in a little more on the weekly chart here, what you'll see is we have a drop-based drop supply that we are currently working our way back up towards. So I expect that if we do get some more rallying, we're going to turn around at the 162.21, 164.24, possibly see interest rates rise as the price of the 30-year starts heading back down. Dropping down to the daily, what we had was an immediate reversal of trend when we had a positive divergence. Notice prices had made very similar lows. Actually, I take it back. It's not really divergence. It's just confirmation. You had a low and higher low, and then a low and higher low. So higher low followed by higher high, that's an uptrend, my friends, on this time frame. Now, it's not a very strong uptrend because we barely broke out of the previous high and couldn't get above 60. So we are definitely seeing some weakness going on in this market. Remember, that's the weekly supply zone up there, 162.21. So we're trying to work our way up to that before we possibly turn around and head back down. We have a daily demand here at 157.24, 158.25. Not seeing any kind of overhead supply other than that weekly. And so what I'll look for as we come into that weekly supply, maybe some sort of divergence where we make a high or lower high following on the indicator while we make higher highs in price. Dropping down to the smaller time frame, just to get an idea of what we might be able to do this week, we should see some more bullishness, I believe. No, actually, now we're starting to see a little change here. I was thinking there might be some daily bullishness, or bullishness from the daily chart, excuse me. When I drop down to the 4 hour, let me get rid of this for now. There we go, delete. Actually, you know what? I want to go to the contract specific. So I'm going to go change the symbol to the specific contract for December here. Now we're still trading. And that way we get a little more accuracy on the numbers and the data here. I'm also going to clean up my chart. So there we are. And right now, where we had a retracement, we're experiencing a new impulse to the upside. You can see that as we're trying to break to new highs on the 4 hour, we don't really have the momentum to sustain a move to the upside. So let's take a look at our last impulse and then correction. And our overhead target, we may start to stall out around 161.28 because according to the Fibonacci extensions, that's where our first target might be. And we did talk about the overhead supply around that 163 area from the weekly, I believe it was. Let me see, I don't know if it'll show on this chart. Not really. Let's see the daily. Yeah. Anyway, going back to that 4 hour, we may run out of steam pretty soon. As you can see, we had a topping tail on this candle on a Friday at the close. Couldn't break the prior high and also had less momentum as we came up there. So that's suggesting we may not even be able to make it to 161.28. We might end up getting a pullback. And on this 4 hour chart, if we pull back, my first target is this demand right here, rally-based rally at 159.05. We drop down to a 60-minute time frame, just get a little more detail. You can see the weakness coming in, topping tail on the candle right there. Again, when we're making new highs in price, you should be doing it on the momentum indicators as well. We're making those highs without momentum. So it looks as though we may end up trying to break to the downside. I don't have a good entry yet. I usually wait for a zone or some sort of formation. I just have nothing here to really get into. Try it on the 15. Might just have to be patient, wait for a zone to form. That's all. And that's what it looks like. Even on the 15-minute, I'm not seeing anything. So be patient, wait for the zones to form. And if they do form on the 60-minute or 15-minute or even the 4 hour, look for that drop down to the 159.05 this week. Let's take a look at the 10-year, shall we? I changed my symbol over to the TY. Actually, ZN, I'm sorry. TY is the old symbol, but I'll use the continuous contract first and start off on that weekly time frame again. So here we are on the continuous contract weekly, and this looks much more bearish than the 30-year did. As far as demand, well, it's gone, and we're headed down to this one. So we still have movement on the 10-year. Wow, look at that rally base rally right here, target of 129.16. So we still have a little bit more to go, over $1,000 or a full point to go to the downside. That's opportunity. As far as supply, we also have a supply zone here. Well, I don't know. It's kind of No, it doesn't quite work actually. Now that I look at it, because the wick for the leg out candle goes above the basing candle. So let's drop down to a daily time frame and see if we can fine tune something here to be able to get in and play this. Unfortunately, we're still making lower highs and lower lows, so we're not going to be able to get up to this area of supply that I see. Drop, base, drop. It's already been tested. That was the opportunity. We'll have to wait for a new one to form. I don't see, if we're in a downtrend, we shouldn't break any of those highs. There's no way. So, I mean, it'd be great to short up here. That's a great supply zone. I just don't see us getting there because that would change the trend, right? And you go back to that weekly chart. We're on a daily, so you go to weekly for the trend. Maybe not. Maybe we could get there without breaking the trend because technically you're only breaking the weekly trend if you go above 135. So we got 133 and at 5.5 as a possibility. We also actually have rally-based drop right there. That's actually closer and more viable. This would still keep us in the downtrend if we did come up to 131, 27.5 to 132, 8.5. And as far as targets go, let's take a look. I guess it's still the same, the 129.16. I like that. That is probably the best opportunity I'm seeing here. Now, you don't want to get out right at the zone. You want to get out before that. I forgot to do it in the other videos, but still looking at about $2,100 move for that. And the risk, obviously, you got to put your stop above. So you're looking at about $400 of risk for $2,100 or a 5-to-1 ratio there. A little under, but it's pretty good. You get the idea. Looking at the smaller time frame, if you want to fine tune that a little more and see if there's something a little bit closer or more, a little less risk. Unfortunately, great selling pressure here, but not a good zone. Just kind of muddled, so I don't see anything to fine tune. Oh well, drop down to a 15-minute chart if you wanted to trade that intraday. And come on now, there it goes. I'm not seeing any opportunities. So I would have to stick with the 4-hour chart on that and just take the swing trade. That's really all I had as far as a good opportunity. Actually, you know what? I need to go to the specific contract, so let's do that just to make sure we got the right numbers. A lot of times when you have the continuous contracts, you get some bad numbers are off just a little bit. So you really want to focus on, especially when you're going intraday, the contract specific. So again, here I am on the contract specific 4-hour. It looks about the same. Actually, no. That zone that we had right here is different, isn't it? Everything's a little different. We do have drop, base, base, drop. That works. So supply zone 131.18.5, 131.25. That's tested. So interesting. We have a little bit of bullish pressure coming in. We made 2 lows right here where we did not go below 40, and we have been above 60. Those are all bearish, bullish signals and suggesting we might get a little bit of a pop here. So that's what I was saying. You got to go to the contract specific, and looking at the 10-year specific December contract, it looks like we might get a little bit of a rally going on here. As well, it's not that strong. I mean, we did make a lower low after a higher high, so no trend really right now. We're just kind of sideways. So that changes the game a little bit, but I think the big picture is still overall to the downside, and the pressure's that way too. If I go back to the 60-minute chart on the specific contract, kind of failed to really hold above these highs. You can see it's still very bearish, staying under 60 and going below 40 on the RSI. So I just don't have a good entry. I need a good supply zone to be able to get short. I don't have one, unfortunately. The only thing you might have is maybe because we're impulsing down and we're tracing up, Fibonacci. That's it. If you were to look at the last impulse down here. And let's see. Put those numbers in for now. You can see that we retraced actually pretty deep, the 61.8. Let's see, did we hit the last one? Oh, wrong one. The last number should be 76.4 or 78.6. Technically, the correct number is 78.6. So no, we didn't hit that one. But we stalled in the area and closed right around the 50%. Stalled in the area of 61.8. Might just already be moving down. Unfortunately, I don't have a good entry for us here, so I'm just going to have to wait. So while we're waiting, let's take a look at the 5-year. Not sure there's really going to be anything there. That's like watching paint dry from time to time. That's a slow mover. Let's put it that way. There's been some trades, but no, not seeing anything there. That's all I really got on the treasuries. We do have a demand zone here. I'm way down on the 15-minute, but let's start off again going to the daily. And let me clean my chart up because I was doing some analysis and teaching there. So obviously, big drop still happening. We have no strength in this security whatsoever. We have a really good supply zone if we can get back up to this level. 122.75 to 122.15. Break that down into the 4-hour. And pretty much the same rally base drop. So the zone could be narrowed down a little bit if you're looking for less risk. You got rally base drop right there. Unfortunately, I think we may have already just hit something here and turned down. So I don't see us getting all the way back up to 122.10. So that's all I got going on in the treasuries. Not a whole lot of exciting stuff. We'll just have to kind of keep an eye on it to see if anything changes.